Good evening, Mr. Mutisunge Zulu.
Good evening, Ueda. Thanks for having me on Springtone TV.
Now, before we address the reactions of the markets to this postponement, the main reason given for it is that the quorums were not met. Now, the voting dates were set by the bondholders themselves. What would lead to quorums not being met? Is there more to this, especially that the new date is the deadline for the 30-day coupon payment?
Thanks for that question, Ueda. So the extension by the bondholders, of course, is negotiated. And the bondholders, in some sense, the creditors themselves, are a very diverse asset class. It's just not one person, it's a lot of them. And I think it's only fair that all of them be given an opportunity. And I think that in itself is the answer to some of the armchair critics that have come up to say that debt could have actually been restructured by a local firm in Zambia. But now you can actually see that the asset class is diverse, and to get to all of those people, you need to give them time. So whenever there's time that is asked for, then clearly quorum has not been met. So I think the calculation was that if we give it more time, you will have more players, and then whatever vote would be, come out of this would then be, conclusive, inclusive, and would be a fair vote. But look at it this way. It's a lifeline that Zambia has been given. So if the bondholders said no, would be talking default right now. But then it gives Zambia at least over 25 days to figure out what the next move is. So those deliberations have continued. There is a financial advisor that is still talking, and they're talking to bondholders to convince them of what that vote should be like. But again, on the other end, the Ministry of Finance did, give a statement like 2 weeks ago saying they didn't have any fiscal space. But look, it's a wait and see. The question is, if the Ministry of Finance felt that they didn't have fiscal space and then that was their final position, then why should we wait another 25 days? Then it means that there is still hope that they could get to that agreement, and that would be then determined by whether the East and the West can trust each other. What's coming out of China's negotiations would reconcile with what's coming, the expectations of the bondholders. But as it is, we are all nervous, we are all on the edge, and we are following keenly.
It's interesting that you're most likely answering what would have been my next question. And we have about 20 days till the voting on the 13th of November, like you've said. Obviously, further increasing the anxiety levels of stakeholders, even ourselves. Now, how are the markets and stakeholders, such as the creditors, reacting to this? And also, what do you suppose is or will be happening in the background during this waiting period?
Well, they'll be talking. Much as it's silent, there is deliberation going on. There's one set of, the creditors, that's China, that's talking to Zambia. And then on the other end, there's bondholders. And locally as well, they are probably trying to put their heads together and say, you run various scenarios and say, should we default? This is what, will come out of it. There are implications of default. There's cross default clauses. And, default is not a nice thing, because you'd find that even where the government had guaranteed and did deals, all that will then, encapsulate into the effects. So there's that going on. If we look at pricing in terms of dollar debt already priced in a potential default. I think Zambia is the worst performing of all emerging and frontier market assets. They've already priced that in. You can actually see that it's paying 35% to about 45% on dollar debt, and that's really, really through the roof. But at the same time, if we look at the local markets, it's business as usual. Depreciation of the currency, though at a slow pace. The Kwacha is still at 20. 20 is a very, very elevated level. We have a treasury bill auction on Thursday, which is tomorrow, and we expect a similar outcome to what we saw 2 weeks ago, where appetite, assets have become unattractive because no one wants to take on Zambia risk without certainty of what's going to happen until maybe the 14th. As is, everybody's just going to be on the fence right now and watching to see any news that comes out of these negotiations. So it's a quiet period, but people are more anxious and nervous, and that's exactly what the state of the market is in Zambia and offshore as well.
Mutisunge, Zambia is going through this debt relief quagmire, and I'm sure there are some countries watching closely as they may be heading the same route. However, that doesn't mean the rest of the world is at standstill. Tell us what is happening in the markets around the world.
Okay, so around the world, COVID still is an issue in Europe as they're getting into winter. So COVID cases are going up, and we're going to be talking about stock markets for Europe a lot, because we're now seeing leisure travel stocks all taking a tank, and that is pretty much worrisome for stocks in that area. But then if we look at Wall Street as well, so Wall Street is actually taking a cue from what's happening in Europe. So what we see in Wall Street is also a gyration and a confluence of expectations around stimulus measures. There's stimulus measures that are coming from the US potentially before the election. At the same time, there's a bit of COVID here and there. It's the ending season in the US, and we can see that tech stocks are still doing fairly well. There's a bit of recovery here and there. China as well. We see that the dollar is slightly weaker on anticipation that stimulus would be coming. Dollar index against a basket of 6 major currencies was about 92.7. But then a weak dollar has actually given momentum to base metals because copper hit the highest ever seen in 2 years in terms of $6,985 a metric ton before sliding back to 6,899. And it has actually just shaped the forecast of most base metals. Very, very positive. The electric car era is also pricing in, and copper is also taking a cue from what's happening in China. China is recovering faster than any other nation. Just earlier in the week, we were talking about its GDP growth of right about 4.9% from 3.2% in quarter two. Quarter three, momentum is coming back. I actually see China growing more than 1% this year. So, and that's also coming on the back of their central bank that is giving that level of assurance. So it's neither here nor there. In the crude markets, we see crude then give up 3% today and is trading for $42 a barrel. That's for international ICE Brent, while WTI US crude futures were just above $40 a barrel. Then we've seen other currencies such as the Aussie dollar and the New Zealand dollar as well take a lifting from a stronger yuan, 0.6% up, and the Australian dollar as well was nursing a bit of losses on expectation that they would be cutting rates. The theme around the world right now is as though rate cuts have bottomed. There is no room to cut rates any further. It's more about stimulus, and that's exactly what the US Fed was talking to, the US government about, to say they need to see more fiscal spending, and they've committed to, providing stimulus to support the US economy. So in a nutshell, that's exactly what is happening on the global scene.
Right, Mutisunge, before I let you go, and not to sound superstitious, may I remind you here that November 13th is a Friday. Thank you for coming through to this 24's Money Watch.
Thank you, Ella.
Yeah, that was